It's Tuesday, September 3rd, 2024, and I'm Dave Sobel. 4 things to know today. U.S. Consumer Confidence Index rises slightly despite labor market concerns. Dell surpasses expectations with an 80% surge in AI-driven server sales. An IBM study reveals a sharp decline in confidence in IT departments, and Intel Mulls splitting in half. This is the business of tech. Back from the long Labor Day weekend in the U.S., we should talk about some economics. The recent Jackson Hole Symposium revealed a shift in global economic sentiment. Central bankers from, among others, the U.S., Canada, and England expressed optimism about steady growth and low inflation, moving away from the crisis mentality of previous years. While the U.S. economy appears solid, concerns remain about potential risks and the impact of high interest rates on economic activity. Central bankers acknowledge the need for caution as inflation pressures could resurface, and the effectiveness of monetary policy adjustments is still uncertain. The conference board reported a slight increase in the Consumer Confidence Index to 103.3, indicating that recent job market volatility and soft job numbers have not significantly harmed Americans' overall outlook. However, despite falling inflation and a low jobless list rate, the index remains low historically, reflecting ongoing discontent with rising prices. Concerns about the labor market are growing as the jobless rate has increased from 3.7 in January to 4.3 in July, leading to a more pessimistic view of future labor conditions. July data on income, spending, and inflation indicate a balanced U.S. economy, with personal income rising 0.3% and consumption spending up 0.5%. Inflation remains steady at 2.5%, supporting the Fed's potential interest rate cut this month. Gartner projects that cybersecurity service spending will grow by 13.8% in 2025, reaching $86.07 billion, driven by concerns over a talent shortage and increasing cyber threats, particularly those involving generative AI. Cybersecurity spending is expected to rise 15.1% to $212 billion, with security software also seeing significant growth. AI-enabled attacks are identified as a major factor influencing this trend. Why do we care? Vibes. The data shows a strong U.S. economy, and the vibes are a lot less strong. I'm going to couple the data with a big idea I presented on Thursday's show. Optimism should be your default. Not blind optimism, of course, but optimism nonetheless. There should be plenty of opportunity out there, and more importantly, you can convey that to customers as their opportunity to seize as well. Today's episode is supported by CoreView. Your customers need your Microsoft 365 expertise, and CoreView has the only M365 management platform designed for MSPs. Manage hundreds of tenants, automate manual tasks, and monitor compliance, all while intelligently comparing to the baseline. With a no-code control approach, CoreView revolutionizes your Microsoft 365 administration. This powerful platform enables automatic reporting and remediation, ensuring optimal performance and security. The best part? You achieve this high level of service without the need for a large workforce, allowing you to focus on growing your business through efficiency. Want to know more? Visit coreview.com/MSP and find out more. So let's talk about some earnings calls. NVIDIA's recent earnings report indicates strong demand for AI-related chips, with revenue doubling to $30 billion and net profit rising to $16.6 billion. Despite NVIDIA's impressive revenue growth of 122% year-on-year and a net income increase of 168%, its stock fell by 6% following the earnings announcement, as concerns about slowing growth emerged. The company continues to perform well across all sectors and expects future revenue to reach approximately $32.5 billion, but faces challenges including delays in next-generation chips and an investigation by the U.S. Department of Justice regarding competition practices. Dell's Q2 2025 earnings report showed a significant 80% increase in server sales, driven by demand for AI-oriented servers, particularly those using NVIDIA chips. Revenue reached $25.03 billion, surpassing expectations, with net income rising 85% to $841 million. Despite a strong performance in the Infrastructure Solutions Group, which saw overall sales rise 38%, the Client Solutions Group experienced a decline in revenue. Dell revised its full-year revenue guidance to between $95.5 billion and $98.5 billion. And CrowdStrike reported a significant financial impact from that recent global IT outage caused by a sensor update, expecting a loss of about $60 million in annual recurring and subscription revenue. Despite this, CEO George Kurtz emphasized customer loyalty and trust, countering claims of defections to competitors. The company experienced a 451% increase in net income year over year, but has lowered its revenue and profit forecast for fiscal year 2025 due to the incident's ongoing effects. Why do we care? If you sprinkle a little AI pixie dust over most things, investors in Wall Street will reward you. Now, that's not true when it comes to Main Street, as we've seen data that shows mention of AI drives down the value. So pair the two ideas. As an IT services firm, you should be focusing on business outcomes. With AI inside, you will deliver solutions that benefit the business, be it revenue increasing or cost savings, and lean into the business side and away from how it works. And let's note two things. It does seem that CrowdStrike will take a revenue hit from a breach. And second, its slowdown will be from an astronomical 451%. So it remains to be seen how long-term the dip will be. A recent IBM study reveals that business leaders' confidence in IT has significantly declined, with only 47% considering their IT organization effective, down from 69% in 2013. This discontent stems from rising expectations for technology to deliver competitive advantages and inadequate communication between IT and business leaders. To improve IT service delivery, the report suggests increasing female representation in tech, addressing technical debt, leveraging AI for modernization, measuring technology's impact on business outcomes, and involving the workforce in AI initiatives. The SaaS Disruption Report by Osmosis and Enterprise Strategy Group reveals that 78% of U.S. tech leaders are concerned about SaaS security threats as reliance on those applications grows. Key risks include granting data access to third-party providers, leading to potential cyber attacks and data leaks. The report emphasizes the importance of data retention and highlights that 72% of leaders prioritize security. Recommendations include adopting a no-data architecture to maintain data ownership and conducting regular security audits to mitigate risks associated with SaaS applications. And enterprises are increasingly adopting cloud solutions to meet the demand for generative AI and machine learning, with 63% reporting accelerated cloud adoption this year, per Foundry research. Despite challenges like talent shortages and cost concerns, companies plan to allocate over 25% of their IT budgets to cloud technologies, averaging $95 million, with a significant portion directed toward AI platforms. Cloud consumption has grown approximately 20% year over year, and major providers are expanding infrastructure in response. However, concerns over costs, security, and integration remain prevalent among IT leaders. Why do we care? It's that first story I'm going to linger on, as I think the other two are supporting of the general IT services strategy. IBM's survey highlights more of what I mentioned in the last story and raises the bar. It's becoming table stakes to be involved in the business, delivering business outcomes, with technology as part of the competitive advantage. Fail here, and you lose. Thoreau.com reporting how Intel is considering a potential breakup of its chip design and foundry businesses due to serious financial struggles, with CEO Pat Genslinger exploring various options to present to the board. The company has faced significant challenge this year, including a 60% drop in stock value and significant layoffs. While immediate changes are not expected, Intel may implement conservative cost-cutting measures that could hinder innovation, leading to speculation that separating the foundry business may become necessary. Why do we care? Intel's really struggling. While I don't necessarily see this as critical to daily operations of IT services orgs, it should be a contributing factor to your strategy planning with customers. We're pending a big upgrade cycle for hardware with a wave of AI-enabled PCs. Will Intel be a participant? Well, I'm not betting on it. Thread has declared death to the ticket. Did you know tickets date back to the 1800s? And customers hate tickets. Thread uses an approach for connecting, communicating, and ultimately collaborating. Thread allows people to come together around a topic. They can discuss and make decisions. They can share and invite the right people. The future of service is collaborative. Supercharge your service experience by seamlessly integrating AI and automation to meet your customers where they are, in Teams, Slack, and desktops, not in tickets. With instant updates to and from ConnectWise, Autotask, and Halo PSA, keep all communication in one place, where it should be, with people. Decrease time to resolution 30% with chat-based support by visiting getthread.com/MSP Radio to declare death to the ticket. Thanks for listening. Today is Telephone Day, so I'll be using that to call my dad as it's his birthday. Happy birthday, Dad. I'll be keynoting for Pulseway at their virtual event September 11th and 12th. Would love to have you join me. Link is in the show notes and in the description, so sign up for this free event. And I will be taking questions live during it. And if you got a comment or thought on a story, put it in the comments if you're on YouTube, or reach out on LinkedIn if you're listening to the podcast. If you enjoyed the show, give it a review, or more importantly, make sure to share it with a colleague. Subscribe and follow on your favorite platform. I'll talk to you again tomorrow.
The Business of Tech is written and produced by me, Dave Sobel, under ethics guidelines posted at businessof.tech. If you like the content, please make sure to hit that like button, follow, or subscribe. It's free and easy and the best way to support the show and help us grow. You can also check out our Patreon, where you can join the Business of Tech community at patreon.com/MSP Radio, or buy our Why Do We Care merch at businessof.tech. Finally, if you're interested in advertising on the show, visit mspradio.com/engage. Once again, thanks for listening to me, and I will talk to you again on our next episode of The Business of Tech.